So I made $10,000 today day trading prop firms. As you can see, here's some of the proof. Is $3,000 in one account. This was copied across two accounts. I'm going to click the other account here so you can see the proof. And then I had another account which I made $1,200 on across two accounts, because that's all I needed to secure a payout. And then I had some other accounts that outside of this that I made, I think, just over $2,000 on. And in this video, I'm going to break down the exact trades I took so you guys can see exactly how I apply ICT concepts in real trading scenarios using time and price. So if that sounds good, be sure to stick around and watch this video all the way through to the end. Alright, so for the first trade that I actually took, it was a Nasdaq short during the Asia session, and I actually went into the Asia session with a bearish bias. And the reason why I had a bearish bias to begin with was simply because early on in the day, we saw price aggressively trade through that new week opening gap and close below it. That gave me the signal to anticipate further bearishness within the market. And the simple ideas around that is this, right? If we have a new week opening gap, if price is bullish, price should respect the upper 50% of that new week opening gap. And if price is bearish, it should respect the lower 50% of that new week opening gap. So the fact that we opened, right, we gapped higher, we retraded back into the new week opening gap, and we showed no willingness to actually turn around and start trading higher, because if it was bullish, it should have respected the new week opening gap. And by virtue of it violating the new week opening gap and closing below it, that sends a strong signal to actually anticipate shorts within the market. And going into the Asia session, because I'm actually looking for bearishness in the market, I'm going to be targeting sell side liquidity. So going into the Asia session, I literally just looked back on price and I saw that there were relative equal lows. So that's a high probability sell side liquidity pool. So you can anticipate that price is actually going to draw into that. So at the open of the Asia session, price trades into that 50-minute fair value gap, breaks down, breaks structure lower here. Because I'm already anticipating bearishness within the market, the break of structure lower after trading into an opposing PDRA, which is the 50-minute fair value gap, confirms that price is actually now ready to sell off. And because we have time of day on our side, which is the Asian session, a session where we anticipate high probability setups within the market, and the fact that price is trading nearby high probability sell side liquidity, this creates a high probability opportunity to see a sell setup. So what does price do? Price breaks structure, retrades into the range it created when it broke that low, trades into a 50-minute bearish order block, and then that's when I went short, targeting the sell side liquidity. Alright, so the second trade that I took was actually a gold short during the London session, and the reason why I actually had a bearish bias going into the London session on gold had everything to do with the dollar index. So I was actually using the dollar index to frame the sell setup in gold, and the reason why I've done that is because the dollar index has an inverse correlation to gold. If the dollar index is going higher, that means that you anticipate shorts within gold. And the reason why I was anticipating bullishness within Dixie was simply because I saw that price was trading near an old daily high. I also saw that the dollar index had violated the daily bearish order block by closing above 50% of it here. So it's trading near an old daily high, it's violated a daily bearish order block. If price is bearish, it should respect this bearish order block, right? But by virtue of it violating the daily bearish order block, that means that there is no longer any resistance in the way for price actually trading into that daily high. And if price seeks liquidity or inefficiency, that means that there's a high likely chance that price is actually going to trade into that high. And the anticipation of price trading into this daily high is how I framed my bearish bias for gold. And if I have a bearish bias going into the markets, all I'm doing is I'm looking for the right time of day and I'm utilizing the opening price to be able to frame my setups. So in this case, we had the London session open for this trade, right? And I was using the midnight New York opening price. And all I'm saying is that if I'm bearish and I see price trade above the opening price during the right time of day, which is the London session, trading into an opposing PDRA, and then I anticipate rejection from that area. I did make a complete video, by the way, on my A+ ICT entry checklist that I use for day trading. If you haven't watched that video, I'm going to link it right here. Go check that video out after this video because it goes in super detail about my A+ ICT entry checklist. But anyways, I'm using these ideas to be able to frame setups within price. So we had the opening price here at midnight. during the London session, I'm anticipating sales within the market. What do we see? We see price trade higher. What does it price trade into? It trades into this 5-minute really small fair value gap here, if you can see it right here. It also trades into the bottom of this new week opening gap, and I went short literally right here, nailed the London high of the day. I'm actually going to put a trade here so you can actually see that I did nail the high in London, and I put my stop loss right above this high here. And the reason why I was confident within putting my stop loss here was because I was looking at this price run here, right, and I saw that price broke down here, created this fair value gap, rebalanced this fair value gap, continued to sell lower. So I'm thinking if price is bearish, it's already rebalanced this area, so it doesn't need to go up into this area again if it's bearish. So that's what I was anticipating, with higher probability that it's most likely going to trade into this area. Confluence to the fact that this is the bottom of a new week opening gap, that just created a high probability selling area for me. And then I was confident with him placing my stop here, and that was it. That was the sell setup that I framed using these ideas of the bullishness on Dixie, using that to frame a bearish bias on gold, and then utilizing the opening price to be able to frame a sell setup within gold during the right time of day, which was the London session. Because obviously for bearish, smart money is going to look to accumulate shorts above the opening price, and then we're going to utilize the right time of day to be able to frame a high probability setup. So if we're seeing price trade into these opposing PDRAs during the right time of day above the opening price, we already have a bearish bias. Do you see how I'm using these ideas and these confluences to be able to build confidence that, okay, a sell setup will actually form within the market, and then I'm just anticipating that to unfold within the markets. So you don't need to complicate ICT concepts, you just need to use the logic behind them, and you're going to see by you using the logic behind the concept, you're going to be able to anticipate what price is most likely to do next with higher probability, because you're saying if price should be bullish, it should do this. If price is bearish, it should do that. And then you're looking for those things within price, and then that is how I literally frame these trades, and then that's how I was literally able to make $10,000 today because of these ideas. I hope you guys found a ton of value in this video. If you did, let me know in the comments below if you found valuable. Let me know in the comments as well what type of ICT videos I should make, what you're struggling with as an ICT trader, what you need help with. I can make a video breaking that down. Like, comment, subscribe, and I'll see you guys in the next video.